Good afternoon, everyone. I know I have been given a challenge to talk just after lunch, so definitely it's going to be a challenge for you as well as me. But nevertheless, I'll try and put some effort towards that. So this is my first time in Moldova, and I have plans again to come back next week, which is definitely a positive thing. What I want to talk today, quite briefly, is next era of banking. I've been part of Oracle for 10 plus years. Before that, I've always been into consulting. And Oracle, if you know, most of the time, the impression comes that we are a database company. Yes, we are a database company, but we also are working with banks, financial institutes across the globe. 720 plus banks are working on our solutions. So with that, what I would like to talk about now, before coming here, I was in Austria, Vienna, with one of the CEOs of a tier 1 bank. And during the discussion, he made a statement. He said, tech is the biggest problem or the challenge for European banking. Now, I won't 100% disagree or agree with him, because yes, for traditional banking, if they are not adapting to change, there is a problem. So if you look at, fundamentally, traditional banks have been always focusing on everything within the core. So look at their product processor, their application, the process management, everything has been always in the core. But with the fintechs coming in, the other suppliers coming in, whereas the technology enhancements happening, this has really made banks to think and made bank more like a commoditization. So looking at bank as a commodity, most of the global banks have already started thinking how they can really focus on their core and ensure that tomorrow's bank, what they're offering, is not getting obsolete. So I've been seeing that banks in Europe, or rather even UK, they have been focusing on kind of opening up the core. What I mean by that is definitely because they have been working as a one silo solution, opening up the core has really made them go global, opening it to the fintechs, making it open for the open banking. So the banks have been adopting towards banking as a service, or going towards white labeling their products. So that has been the kind of change I'm seeing. Whereas traditional banks has to still catch up. They are on the journey, but I see there is still big runway for them. Now, if we look at kind of a saying, everybody is saying that the millennials or the Gen Z generation are bringing the change, or they are the kind of drivers towards digitalization. Well, I will say there is a deeper message than that. Now we have to think of the fact where this Gen Z generation is coming from. See, because of the mobile soaring up and all that is happening, these Gen Zs have always getting access to things whenever they want, wherever they want, and anytime they want. So rather than calling them as digital natives, I would always call them as accessibility native. Because they are always saying what they want. They want the look, they want the content, they want the access, and they want it now. So definitely, this is really driving one of the areas around digitalization. Now, so what is bank doing for that? They have to continuously reshape, reinvent their processes, their activities, how they are going in the market, especially from a customer journey point of view. So tomorrow's bank has to be, I would say, completely flexible enough, agile enough. They should be able to scale, or else they are going to be completely invisible, or the market is going to eat them up. Now, as you know, there are a lot of challenges coming from a traditional banking perspective with the new entrants in the market like Revolut. I don't know if Revolut is already here, but a lot of banks, especially I'm seeing in Baltics region, are facing a threat. Hungary region is facing a threat with Revoluts and the digital banks like that. So bank has to completely look at reshaping and reorganizing it themselves. Now, what does that mean? What is it they need to really do? how does that translate into the key areas or the key focus bank should be looking at? So bank should be looking at, I would say, not in any particular order, but let's say the intelligent engagement. Now, they have to engage very intelligently with the end customer, with their, because they have to ensure that they are part of the entire life cycle of the individual or the end customer. They have to think differently with coming up with new differentiated offerings, because traditional offerings are, I would say, becoming obsolete. If you look at from a API first, yes, everybody is talking about APIs, and people have to, and banks are looking at exposing it to APIs. But what exactly APIs are? I will not say dive into that, because I know the next session is going to be around that. But APIs are definitely key when you are looking at exposing your, focusing on core services and exposing the other areas towards the business. So digital first, what do I mean by digital first? Now, I'll spend some time on this slide. Oracle has been in the banking space for more than 30 years. And what we also had 8 years back, a kind of a monolithic solution. For bank, it was everything from core processor to managing the workflows, and to an extent of having the digital areas within a single core. But with the changes coming, what we are trying to do, and we have achieved to an extent, is a complete microservices architecture, which is focusing on a digital concept. Now, digital first means, even from a core perspective, you should be hollowing out what is there in your core, making sure that the business processes, the workflows are actually completely exposed, and getting into a digital engagement layer. Now, this digital engagement layer will be kind of the interface for your banker, your relationship manager. And earlier, everything, the relationship manager never used to have a view of the end-to-end activities of his or her particular customer. So that has to be enabled in the digital engagement layer. And digital experience is where you bring in the APIs, you bring in the interactions with the environment around it. Definitely, that goes unsaid that analytics has to be a part of it. But this is how we have been structuring it, and most of the banks are adopting to this. So the journey is not that every. Sorry, that was not me. So good, that was a good wake-up call. So most of the transformations I'm seeing in the digital banking are either on these three layers. Especially nowadays, the traditional banks are not touching their core. They are trying to just hollow out their core, getting most of the workflows in the engagement layer, and that's how the business they are looking at. Just as a short example, or a small example of how a streamlined digital onboarding works. Now, definitely, we have seen in the earlier presentations on a similar thing, and that's exactly, it has to be a frictionless for an onboarding process. So customer can get on any different channels, either be it mobile, through a telephone call, or visiting a branch, but it has to be completely seamless. So if you bring this all, the process management, into the layer which is the engagement layer, it becomes much easy for a relationship manager to look into it, drive this process without really depending on the back-end process, which is the core or the operations team behind it. And again, with the intelligence coming in, you can make it completely automated and kind of a automated decision-making process. Now, intelligent engagement, what do I mean by that? So the whole experience, as I was saying, for the relationship manager has to be a persona-based. What I mean by persona-based is the relationship manager has to have a complete view, not only from a banking products, what he or she is using, but also his background, what are the kind of visits he's doing on the site. Let's say he's going and trying to look at the mortgages around it. So the relationship manager has to be proactive, looking at cross-selling and upselling. How he can do it? If he has that kind of access of end-to-end 360 review of his customer. Similarly, that kind of a screen or that kind of a, I would say, engagement is not required for a branch officer. Branch officer will have a different view of it. So all these activities can be taken within the engagement layer without really touching your core. This is a small example of a screen of a relationship manager where he gets a complete view of all the current relationship what an individual has with the bank. Now again, here using open APIs, you can really get good fintechs around it. Let's say, for example, if you need to tomorrow engage giving some kind of discounts for films or vouchers, you can again embed that into the whole screen, and that can be enabled. Now, for example, there is if somebody is coming to your branch and the relationship manager has this kind of view, let's say from a family background, he knows that tomorrow is his wife or husband's birthday. The relationship manager can really go to a personal level of discussing, okay, are there any good restaurants you have already chosen to go for? And there are some discounts which we can go, help you out. Again, through this fintech organization who might have embedded into the solution. So the possibilities are endless, how you want to really get the relationship manager enabled for your customer. Now, what I mean by differentiated offerings. Now, if you look at most of the banks are still offering the standard services, but things have to change because there are more offerings which are coming. A lot of neobanks are coming up with this kind of offerings, which is keeping traditional banks on the toes. So, this kind of enhanced offering is what today's banks are looking at. Now, this is more of a snapshot where I'm assuming a bank is a universal bank. It has retail as well as corporate. But again, if you take an example of virtual accounts, now virtual accounts can be used in corporate and in retail. Not every bank is right now offering, but it is now getting a trend that even in the retail side, banks are offering virtual accounts. And again, this came more from an idea where Revolut is doing that. They are trying to give you a disposable card where you can use it online and just can switch it off. So things are changing. You have to constantly come up with differentiated offering. There is no way enough is enough. So banks have to really move towards making that enhanced services, fee-based income, and all those other areas. So payments has really made a transitioning change in recent time. If you look at the faster payments, or just an example of before COVID, India was only using payments, digital payments, around 18%. But during the COVID, it helped further push the digitalization. But today, more than 68% of Indians are using digital payments through account-to-account pay. Now, account-to-account pay is something I would say still new for the European market. And I think in the morning, I heard the Deputy Governor talking about it, and that's a fantastic idea. And I'm very much pro towards what he's trying to bring change in the market. Definitely, Moldova joining EU has to make sure that banks are really geared up towards what is required to be part of the EU compliance. You have to be getting towards the ISO 20022. So these are the new changes coming, which, yes, some might say it is a regulatory push. Some might say it is for the betterment of the end customer. But if you look at from a customer point of view, he or she wants their payment quick and immediate to be transferred. Now, here when I came yesterday evening, the first challenge I faced was paying the taxi guy. I was trying to use the card, and 3 taxi guys said, sorry, we can't use the card. So I said, yes, there is a good potential, and things are going to change. API first. Now, what everybody says API, yes, there's a big market space for APIs, but banks have to really understand how they're going to unlock the value of API. Now, if you look at what this morning Chris was talking about, he exactly gave this reference, which is, you have to, kind of unlock what you are doing as a single core solution. You have to expose your services. You have to focus on your core and make sure, APIs are there to move towards the banking as a service, or make it like an aggregator or a distributor in the ecosystem. So this ecosystem has to be robust and developed. And the bank which will really thrive using this ecosystem will be kind of in the leading position, be it a traditional bank or a digital neobank. Modern architecture, the last one, but very important, which I was referring earlier, that you need to have a right modern architecture or else bank will feel choked with the technology. So when I say modern architecture, what does that mean? It has to be componentized and microservices. No bank in today's world is ready for a complete core transformation. They have to go piece by piece transformation, and for that, the solution provider has to have a completely componentized approach on a microservices architecture. Again, this will help banks as well as fintechs and the API platforms to get the best use of it. Oracle also has 1800 plus RESTful APIs for retail as well as corporate, which a lot of banks have started adopting and using it. Especially the banks which are traditional ones, they have gone for that. Rather than developing things on their own, they are moving towards using those RESTful APIs. Scalability and resilience is must. So it's not a rocket science that you have to build on it. That is required because of the scale bank is growing today. The kind of one piece is missing here, which is security. But being Oracle, we try to not stress on it because Oracle was built on a secured foundation and is still a secured solution. If you look at deployment options, yes, the solution should be able to deploy on cloud as well as on-prem. However, the architecture has to be, in today's scenario, should be able to be on an on-prem with a journey towards cloud. Not all the banks are ready to be on a complete cloud. But yes, if you look at the US, things are moving in a bit different way. Recently, we signed a deal with Navy, US Navy, for a complete SaaS solution, which is quite unusual for a government entity to go for. But again, US goes in a kind of a different aggressive manner. If I look at extensibility, now what does that mean? And how that is going to be helpful for the bank. Now, core product is where the core out-of-the-box functionality should come from a solution provider. And with the business engagement layer, you should be able to build products, pricing with a button of clicks. But extensibility comes when bank wants to develop something very specific for them, for the specific market, for a specific customer. And this is where, without touching your core or the business layer, you can build on top of it. And this will give banks the flexibility to keep constantly changing with the industry. So, extensibility is very important from that perspective. So most of the solution providers, or even Oracle and my competition, they are having this as a layer for banks to work on. Embedded innovative technologies, again, goes unsaid. Machine learning, NLP has to be embedded, baked into the whole solution. If you look at today's customer interaction, or the way bank has the repository of data of a customer is humongous. Now they have to start having analytics tools to predict the customer behavior and try and offer them new services, new features, which will actually have customer growth from a bank's perspective. Today's customer is looking for bank to give them suggestions, give them inputs. They want, as I said, lifestyle banking. Gone are the days where bank used to be a place where you go deposit your money, get a loan, or do some account transactions. Today's bank is part of your life, and banks has to realize that to make use of right innovative technologies. What I would like to conclude here is, based on this 5 areas what we talked. Yes, what we call is lifestyle banking is where we are offering to the banks. But these are the clear 4 areas where today's banks are fitting into. Either they are the greenfield banks, which we know, like the Sterling Bank or Revolut, which are absolutely thriving on the UX capabilities. The ecosystem of open banking and the regulation, they are really making the right use of it, and they have been built ground up. A lot of greenfield banks are there who are really making profits, but there are also more than that greenfield banks who are struggling with making profit margins. So greenfield bank, with the use of UX, it's not just the technology. So they have to start offering more and more products, because as of today, the depth of the product within the greenfield banks are not that as a traditional bank do have. Second area is where we look at tech fins. What I call about tech fins is the Apple Pay or the Google Pay of the world. Now, tech fins have always been thriving on the data which is being generated, Amazon Pay, Google Pay. So all that, they will be coming with a strong data background, and they will be able to bring the entire marketplace. If you remember the first slide, I talked about the extreme one, which is the marketplace. So that's where the industry is going towards, offering a marketplace, a platform as a service, and these players are kind of coming as a threat. Now, what they don't have is the core capabilities. So rather than, I would say, banks fighting with them to win the customer, they have to collaborate. And again, collaboration through the ecosystem of, I would say, APIs and the Fintech arena. Third one is banking as a service or the platform. Now, here, if you look at the likes of Monzo, who have white labeled their solution and offering it to the market. So yes, they are growing. They are, I would say, a kind of more of a balanced between the greenfield and the traditional banks. But again, they have really used the right capabilities of APIs, and this is definitely helping them grow. And last not the least, the conventional or traditional banks. Now, we have multiple banks whom we have been working. So rather than completely transforming their core, their approach is to create a parallel digital bank, which is only kind of focusing on the new technology, making it a core hollow, and bringing all the business functions in the process management layer, and coming out with that kind of a model. Because again, for them, the threats are the greenfield banks. So definitely, what is the biggest asset, I would say, still the conventional bank has is a trust people have. Now, I'll give my example. In UK, I have Revolut, but the entire banking is still with HSBC. So HSBC is my primary account. So the day that starts moving, and again, it's not that far that people will move from digital banks, from traditional banks to digital banks for their primary account. But that trust which a traditional bank has, they should start leveraging it, so that, and with the leverage of that, they should start making it more digitalized. That's where how they will, I feel, will win the race. With that, I think that's from my end. Definitely, we'll talk a bit more on the digital transformation in the next debate, which we'll have with my colleagues. But till then, thank you very much. Thanks.